there is an agreement with government on the actual inflation target. But in terms of how we achieve that, in terms of instruments and tools that are at our disposal, and interest rate being such an important tool, we then have operational independence in terms of that. But I think importantly, we do not target interest rates, we target inflation.
Afshin everyone, and welcome to the Economites, where we have candid conversations on critical issues. My name is Nikom Giba, and today we have a very exciting episode for you. We'll be speaking to Unati Kamlana. Before joining the South African Reserve Bank, Unati worked at the National Treasury, and before that he did time at Standard Bank. Today we'll be chatting about monetary policy in this COVID-19 era, the central bank generally, his journey, and his thoughts on leadership. Do enjoy. So getting straight into it, like I said, we're going to be speaking about wartime monetary policy. But before we get into all of that, I would like us to talk about the SARB a little bit. Now, there's a certain mystique around central bankers and central banks. There's a way that you guys talk. There's a way that you guys dress. I mean, you don't speak about politics at all. You don't speak about other central bankers. And you have a big building slap bang in the middle of Pretoria, and it's big and black. Where does that type of culture come from?
Yeah, I have been made aware by many people about the certain sort of mystery around how central banks operate. It is certainly something that I have seen change in important ways in the last couple of years. I've been with the SARB myself for just over 8 years this year, and in my current role for 5 years. And I think central banks the world over are starting to really prioritize transparency in the way that we conduct ourselves in terms of actual policy making settings, in the publications that we issue, in our engagement with the public. And of course, that central banks in most central bank legislation are required to be accountable to Parliament, to the publicly elected representatives of the people about the conduct of policy, certainly about the conduct of monetary policy as well. And I think, it's probably an accident of history. Given the role that central banks have been expected to play. If you take the example of our own central bank, we established in 1921 at a time where there was a crisis when commercial banks at the time used to issue their own currency, and the central bank was established to establish a sense of stability. And I think from that would obviously come the obligation for prudence, being conservative, and coming across as that type of entity. But probably where it all comes from, most bankers, certainly traditionally, have been known to be quite conservative types, dark suits, dark buildings, and so on. So I think that's where it probably comes from, and it is something that you'll see in many central banks around the world.
And do you see that culture changing, or are you guys set on like, this is us, this is our identity, this is how you're going to pick us out? We are conservative, we speak like this, we talk like this, we walk like this, this is us?
No, certainly. As I've just said, it's definitely changing. I think it's different times. We are central bankers in very, very different times than when we were established almost 100 years ago. And I think obviously different types of leadership, much more dynamic, a changing economic context, a changing political context, certainly in South Africa as well. The central bank was established way before 1994, but there have been important changes structurally and in terms of policy responsibility given to the central bank since the advent of democracy. So it's definitely changing in South Africa, but I can say the same for my colleagues around the world, that there's a lot of forces, positive forces for change and more dynamism and a much more forward-looking and outward-looking approach to policy making.
No, fantastic. We always take a bit of progress whenever we get it. But going on to the actual SARB, what does it actually do? We know that it's important. We know that a functioning economy can't really work without a central bank. What does a central bank actually do? And could you maybe bring it home to our SARB? What does it do? What does it do?
So I think, to bring it down to sort of its most basic relationship with the general public, the SARB is obviously the issuer of currency. So the notes and coins in your wallet, in your back pocket, are issued by the central bank, and the central bank stands good in terms of the value of that currency, and ensuring that it is actually can be seen as a product of integrity, but also as a store of value as well. So that's really the most basic relationship that central banks around the world have got with the general population. And I think to then come to the actual construct of the mandate of the central bank. In our constitution, in section 224 of the constitution, the SARB is mandated to protect the value of the currency in the interest of balanced and sustainable economic growth in the Republic. And we have given expression to that mandate by adopting a flexible inflation targeting framework, where we agree with government about a target range of 6 to 3%, within which we will manage inflation outcomes, and we are held accountable for maintaining inflation within the target band. So that is us giving actual expression to how we protect the value, which is the buying power of the South African currency.
Oh, okay. So would you categorize what you just said as monetary policy, or is it something else in addition to monetary policy? Because whenever people hear monetary policy, they think of interest rates. What you just said, would you categorize that as part of monetary policy?
So definitely. The interest rate is a tool or an instrument that we use to achieve inflation outcomes. So the mandate or the objective of what we do is the management of inflation. So the inflation target is the outcome that we are aiming to achieve. And what we then have is instrument or operational independence, because remember I mentioned that there is an agreement with government on the actual inflation target. But in terms of how we achieve that, in terms of instruments and tools that are at our disposal, and interest rate being such an important tool, we then have operational independence in terms of that. But I think importantly, we do not target interest rates, we target inflation. They then talk about what they expect inflation to do, and because of that, what they think they should do with the instrument that they have to influence inflation outcomes, which is the interest rate, the repurchase rate.
And going forward from the toolbox, are there other tools in the box, or is it just interest rates, or rather did the South African Reserve Bank deem that this is the best tool, or is this the only tool? Are there any other tools in the box?
I think that there are many monetary policy frameworks. The one that we have agreed on as South Africa, the South African Reserve Bank and the National Treasury, is the inflation targeting framework. And within an inflation targeting framework, the interest rate is the main instrument.
Okay.
The long and short is that the interest rate for inflation targeting, when you still have the interest rate to adjust, is the main instrument to use.
Okay, no, that makes sense. And another thing which the Reserve Bank is responsible for is banking supervision. So the granting of licenses, if an entrepreneur or someone who's entrepreneurial says that I want to start a bank, they're going to have to speak to you first, right? And then you take them through certain requirements, or you put them through their paces. What are those paces that you put them through? And can you just explain a little bit before we get to the depth of the actual requirements? Yeah.
So within the central bank, there is a creature of the law, which is referred to as the Prudential Authority. And the Prudential Authority is a prudential regulator of the South African financial sector. And within that is the responsibility to regulate and supervise the banking sector. And the primary legal instrument that we have to supervise and to regulate the banking sector is the Banks Act. And it is that act, which is obviously an act of parliament, which outlines both quantitative and qualitative prudential requirements, which are a minimum of a set of requirements that an entity has to meet before it can take deposits from the public, which is what the business of banking entails. And one such requirement is a minimum capital requirement of 250 million rand, which must be unencumbered and be available at risk to bank depositors. And then, of course, there's a set of other requirements which are qualitative in nature around the knowledge and expertise of the directors of such a banking organization before it is licensed, and further requirements on systems that you must have and invest in to be able to manage successfully a banking enterprise and be able to take deposits from the public. And I think at the center of all of this, which is, I think is very important for the conversation, is that these are for a public policy imperative of depositor protection.
Yeah, correct.
What does that mean? Depositors must have the confidence in the banking system because of the credibility of the regulator and the application of the relevant regulations, that their money will be safe. So if you place 100 Rand with Unati Kamlana Banking Corporation, that you will find it with interest when you return.
Yeah, no, that makes sense. And I think you highlighted a very important point, and that's depositor protection. Because when I have conversations with other people about the requirements, particularly the 250 million, because that seems like it's the hump. It's not necessarily, or you can correct me if I'm wrong, it's not necessarily there to create a barrier to entry, so to say. But it's there to protect depositors, that if something bad should happen to the bank which you have started, there is unencumbered capital, meaning capital with no strings attached, that the depositors can get their deposit back. Am I right? Am I wrong?
So I think it definitely is a barrier to entry, but there's a reason why in this sector of the economy, you require to have some kind of barriers to entry. There is no banking sector in the world worth salt that does not have barriers to entry in banking. Why? Because something can go wrong in banking, and we have enough literature and experience to know how expensive banking crisis and bank failures are in general. And what we cannot afford is for the public to know that their deposits are safe in the banking system. Because what will happen? Then they will not place their deposits with the banking system. And of course, there's got other implications which are negative for, in general, the economy, its development, and the ability of borrowers to raise capital within an economy. So it is a barrier to entry. And I think we can have a debate about whether it is pitched at the right level. I think you can reduce it to 100 or to 50. There will always be people who will say, well, I don't have this amount of money, and therefore this barrier to entry does not make sense. The point is that there's got, like you say, to be a level of capital at risk from someone who wants the ability to raise capital from others through deposits, so that if something goes wrong, those from whom they have raised deposits are able to be protected for their interests, because they are not placing deposits for you to run a business. They are placing deposits in trust. The business of banking is a business of trust. So people have to trust that their money is safe, and that is why you require these kinds of barriers to entry.
Wow, no, fantastic. You explained that very well. I think to conclude this part about the central bank, you were involved. You were quite instrumental on the creation of the Financial Services Regulation Act. I know when we were having conversations earlier, in fact, a couple of years ago, it was still a bill. Now it's an act. First of all, how happy must that make you feel, knowing that you were part of the creation process? And some people have likened this financial regulation shift to a shift which has not been done since the banking supervision was moved from the National Treasury to the South African Reserve Bank. What are some of those big shifts which you can just tell us about? So the first question is, how do you feel about the actual creation from the bill to the act? And also, what were the big changes as a result of the act?
I'm happy to repeat. So I was saying that it was an important milestone in one's personal development, but I think you're quite right in saying it was even a more important milestone in terms of financial sector development in South Africa. It was the most significant financial sector regulatory architectural change in 30 years since the De Kock Commission, as you referred to, the time when we moved bank supervision from the Treasury to the central bank in the late 80s, 1990, the finalization of that process. And I think it's important to just talk to the objectives of that process, if I may. We had a bank, non-bank traditional split in terms of our regulatory arrangements in South Africa. And the Financial Sector Regulation Act introduces what we refer to as the Twin Peaks reform, which we implemented in 2018. And at the center of that is the philosophy of regulating by objective, where you separate the regulatory responsibilities between prudential aspects, so the safety and soundness and protection of individual institutions, from the market conduct or broader protection of financial consumers' responsibilities. And a lot of this came from what we learned from the last financial crisis, the global crisis, the Great Crisis, where if you look around the world, especially the UK being the case in point, where it was found that it is sometimes quite difficult to balance in one regulatory authority the responsibilities between looking after the soundness of institutions from that which is good for the conduct of those institutions with regards to their customers and the financial system in general. So it's now been in place since the 1st of April 2018. It's been only 2 years, but so far so good.
No, fantastic. That's very good. If that piece of legislation is working, then I can sleep better at night knowing that not only the integrity of our financial system is being taken care of, but also the conduct of the financial institution is being watched. But switching gears now, Unati, we're going to speak about wartime monetary policy. And the reason why I call it wartime monetary policy is because I heard it from you in an interview which you gave to another media house. Where does the phrase come from? What made you think about the phrase wartime monetary policy?
So actually, I mean, the context of the interview, which I think you're referring to, was a discussion on regulatory relief measures that we were bringing to bear as part of the response to the COVID-19 crisis. Yeah. So I wasn't talking about monetary policy in that context. But I think, I mean, you can now read even from some of the things that have been published by the IMF and other economists, which do refer to the sort of wartime context within which policy is being made since the start of the COVID-19 crisis. And I think it talks to really the extensive social and humanitarian dimensions of the COVID-19 crisis, the loss of life, the impact of that on demand, the role that medical professionals have to play and be in front line in managing the primary crisis, which is the health pandemic, and of course the ancillary, although not insubstantial, economic implications. So I think that's what people are trying to refer to, and in thinking about this, that the context is quite different if you compare it certainly to the just previous crisis that we had in the global financial crisis of 2008, 2009.
So as you said, some steps were taken by the South African Reserve Bank in order to shield or defend the integrity of our financial system. One of them was a guarantee, if my numbers are correct, was up to 200 billion rand for banks. Can you speak a little bit about that? Can you just explain briefly what was that supposed to do, and is it working?
So the 200 billion SME loan guarantee scheme is a scheme that is underwritten by the Treasury. So the guarantor is the National Treasury Fiscus, and this is because the guarantees, the scheme is structured so that banks can borrow at repo from the South African Reserve Bank for on lending to SMEs.
Okay.
Given the important role that SMEs play in the economy as very important contributors to employment and therefore to economic growth, but also that the South African Reserve Bank Act does not allow the central bank to lend unsecured. So therefore, the central bank had to have this protection that it gets from being secured by a guarantee from the National Treasury. In terms of its objectives, is what I've just explained, to support small businesses during this time, because part of the strategy of responding to COVID-19 was the need to lock down the economy, and therefore to take away the ability of small businesses to generate income, to support employment, and to continue operation. And because of that, you needed to think differently about, so how do you ensure that while we are supportive of those steps that the government has had to take, that small businesses are able to still pay employees and staff, to pay for rent and other goods and services that support the business of such small businesses. So that's where we are. In terms of whether it's working, I think it is early days. It's been only a couple of weeks since the scheme was launched, and as you will know, that the lockdown is only being gradually lifted, and that of course has got implications for what people see as, you know, they are focused in terms of being able to turn their businesses around, potentially or hopefully to pre-COVID-19 levels. So all of that is still coming through, with banks needing obviously to assess each application on its merits, despite the fact that there's a guarantee, and all of those things take time. So it is quite early days for us to say with confidence whether
it's working
or not. But you've seen similar schemes around the world. So it's definitely things that others in similar positions like us have thought about as well.
Oh, okay. And another one which the SARB embarked on was it a directive? Was it an instruction to the banks for them paying out bonuses and dividends? You told, or you advised, or you encouraged banks to hold bonuses and hold dividends. What was the reasoning behind that?
Yes. So the reasoning behind that is quite simple. That in a time of crisis, in a time of great uncertainty, it is more prudent to conserve and preserve capital, because there's going to obviously be important negative implications for businesses and therefore for banks as well. stemming from what I've explained, the implications of the lockdown, its impact on demand, the impact on supply chains, which were gridlocked because of COVID-19, and so on. So that was what we were saying. It was guidance that we issued. So it was not an instruction. It was guidance that we gave to the banking sector to not pay out dividends and bonuses. But we did indicate that those banks who already had made legally binding undertakings to pay dividends, for example, like declaring a dividend, which is a legally binding obligation in terms of the Companies Act, that those could continue to pay. And part of the conversation that we had was the relief measures that we were also giving to the banking sector, including the ability of banks to restructure and reschedule loans, because people were going to obviously struggle to repay their loans because they're not able to go to work, they're not able to generate an income, and so on. So because we know that credit risk takes a bit of time, but those implications are going to come through in the numbers in the next 12 to 18 months. So proactively and preemptively, we provided relief around loan restructures as well.
Since 2008, Unathi, since the Great Recession, there are certain rules which were enacted or rather imposed on banks, that they should have a required level of liquidity, and also they should have an amount of capital to act as buffers, or to use a motoring term, shock absorbers, so that when a crisis hits, they can withstand those shocks. Can you also speak a little bit about if the Reserve Bank made any decisions on the banks regarding those liquidity,
yes,
and also the capital requirements?
Yes, so quite right that part of the Basel III banking regulatory reforms was the imposition of both capital and liquidity buffers on the banking sector. And in fact, in the design, it was envisaged that during times of stress, which COVID-19 obviously is, that banks would be enabled or allowed to dip and use those buffers in order for them to continue to support the economy during the period of stress and obviously towards recovery. So in terms of that, on the capital side, we've done two things. We've reduced what we refer to as a Pillar 2A capital buffer, which stood at 1%. We reduced that to 0. And in addition, we also allowed banks to approach us to dip into what we refer to as a capital conservation buffer, which is at 2.5%, if they need to utilize that during this period. Additionally, we have what we refer to as the liquidity coverage ratio at 100%, which we've now reduced to 80%. All of this in order for us to ensure that banks are able to withstand this shock and assist the economy by being able to provide much needed funding during this time for their customers.
No, fantastic. So in your view, do you see the financial system as a whole, particularly banking? Is it safe? Is it good? Is it still functioning? The COVID-19 pandemic is still going on, but can our financial system be resilient? Can it withstand this?
I think, fortunately for South Africa, while we have a lot of challenges around the strength of our economy, where we were, even before COVID-19 and certainly coming into COVID-19, this crisis, the strength of the financial system, the strength of the banking sector is not one of those problems. The banking sector is well capitalized and strong. It is able to withstand shocks such as what we envisage to be the COVID-19 shock to the financial system. So yes, the information that we have does not present a picture of lack of confidence in the ability of the financial sector to withstand this time.
Last question before we head to your journey as an individual, Unathi. What are your thoughts on the economy coming out of this crisis? Where do you feel like the challenges are? Where are the challenges? Will we come out of this a better economy? Will we come out of this as a worse economy? And I also got a question from, shout out to Tyrone Moya. In your opinion, do you think that there's another interest rate cut coming in the future?
To start with your last question,
yeah,
the MPC is best placed to make an announcement of when, if any, there's an interest rate decision and is a response to what kind of data. On your first question, I think that every crisis presents opportunities and challenges. And I think with every crisis, there are business models which are just proven to not be sustainable and would therefore, unfortunately, go out with the wash and not stand the test of time. So I think there will definitely be what economists refer to as excess capacity, which was in existence before the crisis, which will be taken out. I think there are some features, I can't say specifically what sectors and what type of businesses, but there are features of businesses which I think will be able to survive. Obviously, the more nimble, lean, agile businesses, low to moderate debt, high margin kind of businesses. High debt, low margin businesses will unfortunately, for all intents and purposes, not make it to the other side. And I think because of these general features and implications for most businesses, unfortunately, and the MPC statement you can refer to also makes reference to this, that we should expect a heightened number of job losses as a result of the COVID-19 shock because of the businesses that will be taken out. I think for the types of businesses that I've referred to, there are real opportunities to make adjustments quickly to protect existing customer bases, to access new customer bases and new sources of capital, which are targeting the recovery and the businesses which are in good stead to take advantage of the recovery. But I think it's going to take a bit of time before we get to a pre-COVID situation in terms of growth. I think it's going to take a bit of time, especially in our situation, because we did have our own domestic issues that we were in the process of dealing with, but had not reached a sort of optimal level of where we needed to have taken things. We've made repeated references to the need for the implementation of structural reforms in this economy, that monetary policy can help you around cycles, but it cannot help you with increasing the permanent potential growth of the economy. That is something that can only be done by government-led structural reforms, which, yes, Treasury has started to do the work, the paper that they've already published, and the engagements that we are aware are happening in government. But without all of those, it just means that then your recovery is just further away from where you need to sit.
Okay. So basically, monetary policy is not the only game in town.
Absolutely not. I think many people, objectively, maybe I'm not very objective because I work for the central bank, but I'm looking objectively at what policy has been able to do. 275 basis points reduction in 3 months' time, taking the repo rate to the lowest it's been in close to 50 years, I think since 1973, if I'm correct.
I've never seen it this long.
So all of that is showing that the space that you had, which comes from the prudent management of monetary policy, because otherwise, had you had inflation very high, you wouldn't have the space to respond and provide this kind of relief. So all of this has been made possible by what the monetary policy settings were before you entered the crisis, which is testament to the need for prudent management of macroeconomic policy in good times.
Now, Lati, you were born in Mdantsane in Eastern Cape, right?
Quite right.
Yes, and you went to Rhodes. That was the first varsity you went to. And when you graduated, you shook someone's hand, but this someone is not an ordinary someone. Can you just tell us a little bit about that?
At my first graduation, it so happened that Nelson Mandela was being honored at that graduation, receiving an honorary doctorate. And sharing the same stage, I rushed to shake his hand before he exited on that day. It so happened, of course, that it was quite a special day because it was also my birthday when I graduated with my first degree.
No, fantastic. You can't really ask for
many years ago.
You can't really ask for more. And after that, you moved to Johannesburg, right? You moved to Johannesburg, and you got your first employment at a big bank, and you went to Standard Bank, right?
Yes.
How was that? How was the corporate life? Because that was only a brief part of your life. After that, you spent most of your life in public service. How was that brief period in corporate South Africa?
It being my very first formal job, quite an interesting time, a lot of learning, very steep learning actually for me. So Standard Bank went down to Rhodes as part of our graduate placement process that Rhodes used to have those days, and I was interviewed and got offered a job, which I started as a graduate trainee at Standard Bank. Spent a bit of time in credit, spent a bit of time in global financial institutions, structured finance for a while, asset finance as well. So gave you a lot of very good exposure to important parts of the functioning of a commercial bank. By the time I exited 3 years later, I was part of what then was called SCMB, I think, Standard Corporate and Merchant Bank. I think it's CIB now, Corporate and Investment Banking, yes. The CIB division of the bank. And then, of course, the rest is history. I left Standard Bank for the National Treasury,
yes.
Where I joined as a deputy director in tax policy, which was one of my interests. After my junior degree, I studied a higher diploma taxation law at Wits, and then later a master's degree in the same field. And then I moved from the National Treasury about just over 8 years ago, as I was indicating earlier, to join the South African Reserve Bank to focus specifically on the Twin Peaks work and financial sector reform. And I thought it was going to be a 3-year stay, project-based. And look where we are now.
But then when you were at the National Treasury, that is when you were introduced to Lisija Hanyago. Now, when you ended up moving to the Reserve Bank, you were his chief of staff. How did the first meeting go? And did you guys like each other like first time, or was it a work in progress relationship?
It was quite interesting, actually. So, yes, when I joined the National Treasury, Mr. Kanyako was the Director General, head of the Treasury, and we met for the first time because I had made a decision to leave the National Treasury. And it is my then line manager who made such a big deal, a big issue of that decision, that he actually spoke to the DG to try to talk some sense into me and convince me to stay, which happened. The DG, the then DG and the now governor convinced me. To be quite blunt about it, I think he showed me the foolishness of my ways. And and after that strong talking to, I decided to stay in the Treasury. It happened to be the best decision I've ever made in my career, to not exit at that point. And then when he was appointed deputy governor at the South African Reserve Bank in 2011, he advertised a position for an executive assistant in his office, chief of staff in the office of the deputy governor, which I applied for. And the rest is history.
Oh, no, fantastic. And you're quite unique, Unati, because you've done time at the Treasury and the Reserve Bank, meaning that you've got exposure to fiscal policy and monetary policy. Which one do you prefer? Which one did you have the most fun doing?
Look, I think it's a very difficult question because I think obviously they are two sides of the same coin and as important. What I would say is that my exposure was best served by starting at the National Treasury.
Yeah.
The Treasury responsibility and role forces one to think in much more broader terms about economic policy, about public policy in general. And I think that was necessary for me before focusing as I have in financial sector regulation and financial sector regulatory policy issues. So that's how I'd view it.
And would you encourage young people today that finish varsity and say that, I want an alternative career path? I see many of my peers are going down the private sector, but I want to go via the public sector. I want to serve the public at a high level, obviously. Would you encourage people to apply at these public financial institutions?
Without a doubt in my mind, I think it would be very fulfilling for them as individuals, but it's also an incredibly important need for a developing economy, emerging market like South Africa, to have the best brains drive and be responsible for economic management and driving policy in that way. So I would definitely encourage people to think about it very seriously.
Unati, your thoughts on leadership. What makes a great leader?
Oh, wow. Tough question. I think leadership is having a vision, because it's really about convincing others that there is a better place and a better way. It's about being able to give others hope and inspiration. And if you don't have a compelling vision to articulate, you won't be able to do that. So I think the people who've made it in a big way as leaders have been visionary leaders, in my view. And I think South Africa would be best served by having more of those. I won't mention names for now, but I'm sure if you come to mind. But visionary leaders are a scarce breed that is absolutely required to take us to the next level of development.
Yeah. I remember, I think it was John Maxwell who said that everything rises and falls on good leadership. But when you're not working, what do you like doing?
So a couple of things. I bake.
Okay.
And I spend a lot of time with church work. I am a very committed Christian. So I spend a lot of time with church work. I'm part of the leadership of a local church in Orlando, Assemblies of God in Soweto. So that takes a lot of my time. And of course, spending time with my family, my wife and my kids. And I think actually the lockdown has been absolutely splendid for being able to do that. I also enjoy traveling. It's something that I've actually picked up over the years that I enjoy doing, especially traveling in the rest of the continent.
Favorite music?
It'll have to be jazz.
Jazz. No,
yeah.
Fantastic. Best place you've ever traveled locally and abroad?
So I think best place I've ever been to, Zanzibar.
Zanzibar. You're not the first person to say that.
And best, this is a place that really has stolen my heart over the years, is Umhlanga. So I think my family really a place that feels like my second home in South Africa. I've been to many other beautiful places, but I just think my experience, and my response and reaction to spending time in Umhlanga is just the best that I've had of all the places I've been to.
Last question, and this is arguably the most important question out of all of the questions that I've asked. Kaizer Chiefs or Orlando Pirates?
Kaizer Chiefs.
No, thank you so much. Thank you so much, Unathi. We really appreciate your time on the Economites, and we really appreciate the work that not only you but your colleagues are doing there at the South African Reserve Bank. Thank you so much for allowing us into your thoughts and gather some insights so that we can democratize what we've gathered. Thank you so much.
Thank you for having me.
Sure. Well, there you have it. This has been a candid conversation on a variety of critical issues. It's always fun talking to Unathi because I always seem to learn something new from our conversations. I really hope that you did too. Thank you so much and enjoy the rest of your day.